Hey, everybody, good morning. Happy Wednesday to you. Another money supply video. We've gone through the dollar, the euro, the yen. And so, of course, that's going to leave the Chinese yuan as the fourth major currency to summarize on a base money and a broad money level. Let's try to keep this one more interactive today. I've done 3 straight streams, basically, of M1, M2, M3, looking at the various money supplies. I got them all together as well, finally. But, let me know if you have any questions as we go along, because I don't want to drone on about the same topics for people that have heard it many days in a row, if you have been following. So having said that, let's look at China. Here's China. All right. Let's take off this, 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 and this. This is M1 for China. China's data is very opaque. They do have publications going back to the 50s, the start of the Communist Party. There are only a few state banks in China. China's a completely different beast than the other 3 economies, money supplies that we've looked at. If you're an authoritarian regime, there are a lot of positives to controlling everything. This is a Chinese money supply. Now, as usual, regimes like to screw things up with their statistics. So you see this big jump here. It's kind of reminiscent to what happened to the United States and their money supply with M1 in 2020 during the pandemic madness. They decided to merge savings deposits, which were typically part of M2, into M1. And so if you don't actually follow the context, they just put an M1 chart that looks crazy in the United States. I have made a backwards compatible supply, but China has not yet. They've changed the calculation of M1, and it's caused a huge boost from about 63 trillion yuan to 108 trillion yuan starting in January 2025. My understanding is this is mostly trying to account for the payment activity in their mobile payment market, Alipay, WeChat, Tencent's app. Again, there is no, at its core level, and some people on the channel here have mentioned Frank de Cotter, who is with the Hoover Institute, a wonderful Chinese historian. He talks about this a lot. There are only a few state banks in China, okay? You can classify, Peter Schiff used to like to say that there's a lot more capitalism in China than in the United States. I don't necessarily think that's true. There's a lot of growth, a lot more growth. But at its core, it is a nationalist, socialist, communist party. And so it's very socialist. What they've tried to do here, my understanding, is they've put all the escrow accounts of non-bank payment providers, which have a lot of volume, right, with these state banks. They put that into the M1 money supply because that was not clearing as rapidly as it, or it was not really showing up according to the old calculations. So my understanding is this is probably adding non-bank payment providers to M1. And that's how it looks. They have not made a backwards compatible money supply. They probably won't. This is communism. I mean, the United States hasn't even made a backwards compatible M1 supply. So It's very unfortunate when you try to do these things. I try to look at growth rates. I now have to make another exception if I want to look at M1 and not count the growth rate from December 2024 to January 2025, whatever it is. But this is M1. M0, this is physical yuan, renminbi in circulation. This is actually a very old data series. We have it all the way back to 1952. Nothing unusual about this. And this grows at a pretty quick clip. Faster than everything in China, like I said, is growing faster than in the West. These are very normal, these bumps here at the end of the year, wherever it is. In China, actually, with their Chinese New Year, which I believe is in February, you can see it, even the bumps happen a little bit into February still, January, February. These would be more November, December in the Christian West, let's say, money supplies, but it's a normal thing where the demand for cash is higher at the end of each year. All of these things I'm thinking about when I'm thinking about Bitcoin. Okay, we'll come back to Bitcoin, but if you just look at this chart alone, and we see it going here to May 2025, 13 trillion yuan. I'll show you in dollars what that is in a second. Good morning, Geo. Paper fiat currency is an inherently statist institution because it must be permanently protected by legal tender legislation and other types of government intervention. Correct. Do you know who started the first paper currency? I'll give you 5 seconds. Give you 10 seconds. You going to ChatGPT it? Correct? Correct. It's actually the Chinese Mongolian kingdom, Kublai Khan. The grandson of Genghis Khan. You can look that up. I believe it was around the year 900 AD. Good morning, Broadsword. Correct. The Chinese and the Mongolians together. That was called the Qing Dynasty, I believe. So it's an old institution. I'm thinking about all these things a lot when we talk about Bitcoin saving the world, Bitcoin. I think we will get there, but it's just going to take time. No one can look at this chart now and say it's just like collapsing to zero or it's all going to go into Bitcoin. Obviously, that's not how it's going to work. Another thing, I don't think I mentioned this before, but even like you see how this is very, I'm on linear scale, so this is a very common chart of exponential growth. If I zoomed in before the GFC, it's the same effect on a different timeline. And if we go to half the value before the GFC, so we're at 3 trillion yuan. When do we go to 1.5 trillion? Right here. It was 2001. All right, so from 1950 to 2001, 50 years basically, we got to 1.5 trillion, and we doubled that in 7 years. Exponential growth, very fast. And this is actually faster growth than, like I said, any country. Good afternoon, Richard from Thailand. Thank you for tuning in. Yes, it does. It's a dual purpose. But I just say this again because I talked about this a lot. You can see I don't have great seasonal data here back before 1998. Um, anyway, it's strong growth, and this is that sort of that old. If you have heard this, it's like an anecdote about how you can fill up water in a stadium at certain exponential growth, and the stadium can be half. It takes an hour. You give whatever the exponential growth is. The stadium is half full at 11:59. When will the stadium be full? And the answer is, or I always mess these little anecdotes up. The answer is obviously it will be full at 12. It's half full at 11:59. It's the same thing here. This exponential growth is half full right here. And no matter where you pick your number, right? So here we're at 14 trillion now today in physical current. 13 trillion, right? Peaked out the start of this year at 14, but 13 trillion. So half would have been somewhere here only 7 years ago. So again, I'm gonna try not to lecture here. You guys have seen this a lot, but I think this is helpful again to put. I'll put them all together now. All the euro, the yen, the yuan, and the dollar. So there's a lot of currency here for the Chinese. Let's look now at the bank reserve side. This is base money. Okay. Remember, I have the negative. It's a positive number. We add these two numbers together to get the monetary base, but I have it on the negative because this is this like iceberg underneath the financial system. This is really what everything is pyramided off of. I was in school here learning about how massive the Chinese economy was growing and taking in massive amounts of steel and oil and construction materials from the United States, like right around here. Still growing a lot. And no different than any of the other economies that we saw. But it does seem like this is even just uninterrupted money growth. They have pulling it back a little bit here. The U.S. really tried to make everybody pull it back around 2015, but still growing both ways and very, very fast. Okay, so that's bank reserves now M1. So again, I just talked about this. This shoot up here is just a recalculation. Unfortunately, that's what it is. And now we'll put M3. Chart starts to get a little bit hard to see, but here's M3. Sorry, this is M2. This is M2. So China is one of these countries where they don't publish M3. I've seen some reports where they tried to start M3, but it seems that they're gone away from that. Again, the only difference between M2 and M3 is M2 is less regulated retail deposits and cash-like instruments. M3 is less regulated institutional. Less regulated meaning less regulated than M1, which is your demand deposits, plus your M0, your physical currency. Okay, so this is China in yuan terms. Let's look now how the money multipliers. You can't see my axis here on the right side, but I'm about to show you money multipliers. Demand deposits. Okay. So somewhere here, 10-cent Alipay started to be more used. And that's, again, why they're trying to raise it here and put this increase in activity. But it used to be a very low money multiplier. All right, this means demand deposits is the green shaded area. All right, so it's the green minus the gray will give you demand deposits. All right, so it's for the example here, you just see March 2018, it's 45 trillion is the demand deposit value. Divide that by the bank reserves, which is this big negative number. And you'll get this as the money multiplier, the basic money multiplier. In the West, it's 10 or higher. Here, it's only been 1. Now, with the revaluation, which they did this year, it's now 4. But it's totally different system, totally different levels of risk, actually. And they still have crises. They still have banking problems. All right, now let's look at the broad money multiplier. Now, in all the other money supplies, I was using M2. In this one, obviously, sorry, M3. This one's obviously M2. So I'm, broad divided by base money is M2 divided by the total monetary base, which is the gray plus the black. And you get this. So interesting, China is actually, on the broad money, I noticed, they're the outlier from all the major currencies. All right. And this was only, quote, only 5x before the GFC, which they suffered a lot from. But now their broad money multiplier is 8.5x, which is not like crazy. Remember, the US here was close to 20 before the GFC. I'll show you America's here, right? Let's just take everything off but the broad money. So you see, this is the broad money multiplier for the United States, went to 17.5x before the GFC. And now, with all the financial repression, money printing, trying to keep the system safe, it's only 5.3x, lower than China's. Let's look at, oops, that's the world. Let's look at Japan in yen terms, just to keep everything native. The multiples will be the same. Here's Japan. Suppression from the GFC. Broad money multiplier is only 2.3x. That means for every yen that the central bank of Japan prints, the market only has 2.3 yen. And that's all banks, non-banks, shadow banks, at least what is, to the extent, recorded shadow banks, money market funds in Japan. Let's look at Europe, native euros, broad money multiplier, suppressed again. We talked about all this, right? This is, kind of ignore this. This is a function of switching from other currencies to the euro. It's not really a big deal, but wasn't even that big of a multiple before the crisis. Now it's down to 3x, 3.4x. And so for China, this is interesting. They have a higher broad money multiplier than any other major currency in the world. Irrelevant question. Who's going to outlaw it? They know what they're doing. The Cantillon effect or Cantillon effect, which was originally describing gold, is that gold miners could take advantage of gold mining before the prices of inflation of gold increased the marketplace. Because they were miners, they could actually skew the system, and then governments got involved in gold and things. So that's why the centers of power control money. Russia just stopped publishing, or said they're going to stop publishing data. I don't know if it's going to be all economic data, but they said they're going to stop publishing economic data because of their war in Ukraine. Will be interesting to see if authoritarian states just stop publishing what they're doing. By the way, with China, these numbers are still super manipulated. And again, the money supply, let's take this off to not confuse people, but this broad money number, I'm not saying this can't double from here. It's certainly an all-time high for China. You can see exactly what I'm calculating right here. The M2 supply is 325 trillion yuan. Add M0 to bank reserves. I know bank reserves are negative, but that's just how it should be on this chart. That's 38 trillion. 325 trillion divided by 38 trillion is 8.5x. So you can't predict crises with the money supply, but you can sort of see when things really go crazy. They were high here relative to the time, right? In 2006, just like in the United States, it was high relative to the time. Where's Japan in yen? Japan's the goofy one. They were money printing all the way back to the 90s, even bailing out people from the Nikkei bust. And now this is just so wild to see Japan's like. You almost don't have risk in the system because you have plenty of government liquidity to bail you out. You do have risk because you'll have inflation, price inflation. Tokyo is an incredibly expensive city. It's financial repression. It's harder to make money in real terms. Correct. This is their native fiat money supply. So, this is native yen, native dollars, native euros, 16 trillion euros in M3, and then native yuan. There's no other currencies mixed in. This is the currencies that are regulated by those central banks in those countries. So there we have all four. Now we have dollars. Again, you can see, let's take off all this stuff. You can see the massive explosion still after the global financial crisis. Pretty wild. Look at how big the M2 portion is in dollars. It's 45 trillion. $15 trillion in demand deposits, 14 trillion. $13.2 trillion, whatever it is. M2 minus M1 minus M0 will give you demand deposits. It's great for Bitcoin. But someone has yet to show me a chart where this is going to just sort of implode into the Bitcoin network without the Bitcoin network becoming clogged, being unusable. It's a lot of money that they want to protect and keep printing. All right, let's put it all together. Whoops. It's here, I believe. All right. So this is pretty helpful, I'd say. 5.7 trillion in M0. There is some vault cash that's also included in the money that they print, but it's a very small proportion. I can tell you that the total amount of dollars, euros, yen, yuan, hard currency that is printed in the world is $9.3 trillion equivalent. That's all the cash money, Benjamins. So the top four currencies, and I'm calling it world, but it's top four at the moment, are 5.7 trillion of that, roughly. So 2/3. Plus some vault cash, so 2/3 is the dollars, euros, yuan, yen. Let's do M1 now. Again, we have this goofy Chinese revaluation, but roughly the most liquid bank deposit, which is the demand deposit, plus M0, plus M0. M1 includes M0. M0 is the cash outside of bank vaults. Is 37 trillion. $37 trillion. It's a lot of money. A lot of money to go into Bitcoin. And then M3, which in this case I'm calling broad because China's broadest money supply is only M2. So I have to do that sort of weird lexicon. Still denoted by the 3. Broadest money supply is about $100 trillion. $100 trillion is the broad money supply in the world. And again, when I say broad, I mean it includes currency outside of bank vaults. It includes those demand deposits. It includes less regulated retail deposits like time deposits or money market funds for retail. And then on M3, you have money market funds for institutional, repurchase agreements. If we go to this chart, this is my main headline survey, right? Which we've been doing a long time. This is base money, which is just central bank money. If we only look at the top 4, it's right here, we see that the top 5, it says, is 81% right there. You see that includes Britain, which is basically like nothing, but it is the next biggest at $1 trillion, the sterling. But you're looking at something like 70, 78, 79, 80% is the top 4. And of course, my total might not even be the actual total. In fact, it definitely is not the actual total. I only have the top 50 currencies in the world, but it's at least 95% of the total because it's over 95% of GDP. But they don't publish this in a nice way, so you gotta go sift through all the numbers yourself. So if we're 80% of the monetary base, and then we ask the question, all right, well, we have broad money calculated here for the top 4 currencies in the world at 100 trillion, then roughly we can assume that worldwide broad money is something at the moment of 120 trillion dollar equivalent. That includes all your brokerage accounts, money market funds, repurchase agreements, demand deposits. We can do a ratio here, but this is not that good, obviously, before the Chinese data comes in. China is pulling the world average down. It's not really that helpful, to be honest, but it's something. This is the world average of the money multiplier is, so M3 is not included here. It's just demand deposits divided by those bank reserves. Basically, for every reserve that a bank held, it would hold in demand deposits worldwide. Banks held 7 or 8 currency units more. This is skewed though, because like as we just showed, China's in fact is like 2. Oops, here, 1 or 2, and the rest of the world is 10 or 15 or 20. So it's kind of a meaningless figure, but it's an average. And then everybody went crazy, literally system-wide crazy after the global financial crisis. No ratios make any sense. Financial repression. And there are only 3 currency units for every 1 currency unit held in reserve in banks today. If you do the broad divided by base, okay, so it's a little bit different ratio, but it's M3 now, or the broadest money supply, divided by the monetary base, okay, which can include M0 and those bank reserves. Worldwide, we were at 10x before the crisis. Now we're at 5.9x. And rising, getting riskier. what I predict, which is not that much of a bold prediction, but I predict when the next crisis comes, it'll just go right back down. So here's, for example, what happened in, this is how it looked in February 2020. I'm looking at broad money. Let's take out all the other stuff so you see exactly what I'm talking about. February 2020, 68 trillion for the top four currencies in broad money. That's like every major account you can think of, bank or non-bank. That was 6 times levered over the monetary base, which is historically very low, but that was a worldwide number. Pandemic hits, crisis hits, they print more money, and that number goes down to 4.3. And now they've eased off the gas, interest rates rising, they're trying to normalize. We get to 5.8. My inherent belief is that they think they could just do this all day. Like they got away with it once in the global financial crisis. You pay interest on reserves, so those banks aren't forced to lend out those reserves, and then you just bail out the bad actors or the people that suffer or made bad decisions. Yeah, class warfare is obviously a huge thing. Reclassifying The Big Short as a comedy is also very interesting. I hope we don't go to World War. I mean, the weak autocratic nations continue to be very weak. I mean, what everybody should see with what happened with Russia coming to the aid of Iran is that they didn't come to the aid, and they're completely outgunned, outmanned by the Americans. Again, I'm not defending American imperialism in the Middle East, but Russia's super weak, yet they still bomb Ukrainians every night. So that's an issue. The only peer that the U.S. really has is China. That's without a doubt. China really wants Taiwan. That's going to be an issue. Unless they take it during Trump's term and Trump just says, fine. Everything definitely, I mean, I'm not saying anything new here, but everything seems very dangerous right now compared to a, 2008, 2009 crisis. There was just pure financial, bailing out our friends. Now it's very geopolitical. It's very controlling borders, nationalistic, and class warfare too, like you said. Oh, worldwide. Sorry, I thought you meant World War. Either way, I'm thinking about war a lot. Yeah, I don't have good good data on the property, but it seems like they have a lot of bad debt, and they've kicked the can down the road. Everything I read. Okay, so I misunderstood completely, but I don't think there will be a broad understanding. This has taken me, no joke, like this has taken me 10 years to get to the point where I could even compile charts like this just right now for this video for the worldwide money supply. But most people don't have any idea about it. They still hate Bitcoin. They'll keep kicking the can down the road. Good morning, Anders. That's a perfect quote right there. I note that and it's within every right of them to do so. But they're already curtailing in America. They're curtailing the munitions that were still earmarked for Ukraine under the Biden admin. They're even curtailing those now. So the U.S. is completely out in defending Ukraine. That shouldn't be a surprise to anybody. So it has to be Europe. Same thing though with the exponential growth. All right, it's a little bit slower with the overall. You see 50 trillion here in 2014. Now it's 100. So it took, we can just calculate the exponential growth, right? So it's, if it was 7 years, it would be a 10% growth rate. It took 12 years. So broad money's not as fast worldwide. But again, this is harder to look because we're looking at dollars, and dollars, when dollars are lower and you have many currencies, that means those currencies are losing value against the dollar. So I'd have to do the calculation a different way, like weighting the native growth, which I've done for the monetary base, which I told you is 12.7% per year compounded. That's the growth rate of this curve. 12.7% per year compounded. I don't know exactly what this M3 will turn out to be, but probably a little bit less. It is entertaining. I remember when he went in 2016, 2017. I was just laughing at him. Little did I know he'd still be president 10 years later, and the world-fearing totalitarian madness. I heard a Norway guy got booted for those J.D. Vance memes. As far as I know, he was Norwegian. Having J.D. Vance memes on his phone. All right, so let me put up the ultimate chart again. I show this video almost every day now, or this chart, but so we're at a almost global money supply of 100 trillion, probably 125 trillion if you add up all the different currencies on top of these top four. 125 trillion. But the base money supply, as I've talked about a lot, is a quarter of that. All right, it's 25 trillion. Or if you add up just those four, it's 20 trillion. So you see that multiple is 5x. Broad money to base money worldwide, 5x. Which should be similar to this top four broad money to base, which is 6x. But with all the times that 100 trillion has been thrown around, I think we will get there, but it's a completely different money supply. You think he's going to win? A lot could happen until then, but he absolutely could win. You're right. Scaramucci says he's scared of the Pope. We'll see. Good morning, Jimmy. Yeah, exactly. That's what they'll tell you. It's not the true inflation rate. You got to look at the velocity of money. I would agree it's not the true inflation rate, but it is the rate of growth of money. And when I say true inflation, I mean the price of inflation. Um, I think you can absolutely make the statement that ceteris paribus, if the demand for money does not rise as fast as the supply of money, which is 12.7% per year compounded, then prices will rise. That's a absolutely true economic statement. Now, of course, the demand for money does rise every year at a certain rate. What that rate is, it's very hard to calculate. It's not. It's very easy to calculate supply. Very difficult to calculate demand. They always go back to GDP and GDP targeting these things. Um, whatever. I can do some charts of it, but it's still, in my opinion, is still something to keep an eye on. It's unbelievable. In the land of the free and the home of the brave. People have to look out for that. Good morning, room. So the power curve versus the exponential curve. I think around 155 trillion latest. And remember, we're at 20 trillion now, plus gold puts us at 43 trillion, roughly. You never know. I guess the UK could give people a run for their money, right? If they do, someone just has a meme, maybe with a few word bubbles in the meme. Um, one other thing I was thinking about, I don't have a chart to explain it, but my friend Smidston, who is a great analyst on Twitter, just put this out, and I'll show it here in a second. Um, mm, 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 mm. All right. So Giovanni has been working on this a lot, and people have been wondering if it's true or not. It's starting to look like it seems that MSTR, which I have to resize my screen, but I'm not going to. You can't see the whole thing. Here's 100,000 Bitcoin price. Anyway, the current power curve of MSTR, or if it is a power curve, it looks like it could be on this turquoise line. The white line was how it used to look, which was too fast. But basically, as he said, it might be turning out, the MSTR BTC relationship may be turning out to be a power law. Now, there's a couple things to say about this, but I did comment on it. I mean, so the power curve is basically dominating. Okay, like this. Let's explain what we're talking about here. This is exponential growth. This is how all money looks. I can go to this world money supply if I could find it. Here it is. need to put everything back on. Go log on the left. Take off the, all right. Obviously, you don't even need to draw trend lines. And this is the data that I have, log scale. You can see that it's a straight line on log scale, right? Money, like GDP, like all things, like stock prices, they grow on a straight line on log linear. Bitcoin, however, is different. On a log scale with Bitcoin, you get this. It's a log scale with Bitcoin. It has this sort of concave down effect. If it was log on the time, it would be a straight line. So the question I've been having a lot is what happens to other companies, or what happens to the market or the cost of capital if people just keep wanting Bitcoin over other stuff? What are the types of returns you're going to have to generate for the other stuff? And it's confusing more still because Bitcoin does not grow at a constant rate, right? So like a treasury yield, that's a constant rate of return. Of course, the rate can change, you know, depending on where the central banks set the rate. It might go down to 3%, may go up to 7%, may go down to 4%, but that is a constant rate of return a year. It will always be a straight line on log scale over time, even if you change the rate a little bit with different interest rates. Bitcoin does not do that. So it grows at a much faster rate right now. But if you just goes purely by the math, all right, I got to see if I have this actually to show you. Imagine what would happen to these two lines if we went further out in time and we still had the TradFi growing in a straight line and Bitcoin growing at a not straight line. You would actually have TradFi flip Bitcoin again at some point in the future. So I think I have this for MCAP on Bitcoin. Give me a second. But anyway, so the question becomes, if we're all going on to Bitcoin, everybody loves Bitcoin, but Bitcoin's rate of return will decline over time. So right now it's about 45% per year. It's going to be 42% per year by the end of this year. It will get down to 10% per year, which is the long-term, relative speaking, stock market return if you invest the dividends. You can pick your starting date, end date. It changes a little bit, but whatever, 7, 8, 9, 10% is the long-term stock market return. Bitcoin's rate of growth will reach 10% in 2070. Okay, so there's a concrete date based on the trend where this 42% per year goes down to 10% per year. So one might actually ask the question, and this is pure mathematics, right? But like, why would that, at that point, if stocks are still going up 10% per year and Bitcoin's only going up 9%, maybe you wouldn't want to hold Bitcoin at that point. It starts to get more philosophical because everybody believes that Bitcoin's better money, harder money. But at least the mathematics of it do change from 2070. And by the way, I've also said this a couple times. If you bought Bitcoin today at 100K, and then as this rate of growth declines, when would you yourself today get a 10% return? Now you'd expect a 42% return based on the trend, or 45 to 42. But when would that fall if you bought and hold today to 10%? You'd still have to hold it for like 100 years. So you got to wait a long time. But what I'm saying is the trailing 12-month of the curve will fall from 42% per year down to 10% per year in the year 2070. Good morning, Slanik. Good morning. So my question that I've been playing with, and I need to get a chart to show you guys the difference, but the rate of growth of this, by the way, this is my trend line here, is about 7.5%. So that's all the gold in the world, all the fiat money in the world. Gold actually takes that rate of growth down Gold hasn't been growing that great, even compared to fiat money over since the life of Bitcoin started. And again, this is an arbitrary date. I could pull it out further and be maybe different, but I'm starting everything from the day that Bitcoin started. So what happens to like the TradFi markets when, like, let's just use this. TradFi is continuing on at 7.5% per year. What do financiers of Bitcoin demand, like out here, when Bitcoin's still growing at 30% per year, but TradFi is growing consistent 30% per year and falling, but TradFi is growing at a constant 7.5%. At some point, I think we'll have to get some sort of a change in the capital structure. Like, do we do fixed loans, or do we do loans where there's some sort of a kicker on the end based on the Bitcoin value? Or are they like loans that are now structured differently, like where the rate of interest actually will change each year that the loan is scheduled out? That's my question. That's what I've been thinking about a lot. And so when he says that MSTR starts to look like a power curve, now it's true, this is the MSTR BTC relationship. So it's not, as far as I know, people haven't done an MSTR in time relationship. But what I said is if all companies that hold BTC go to power, and all companies eventually hold some BTC, then what the financial system will evolve to, then this is what the financial system will evolve to in the future. This is a massive consequence for the traditional leveraging mechanisms, which are all entirely exponential. It's very philosophical, I guess, at some point, on some wavelength. But it will be brass tacks when people have to understand, okay, am I going to allocate to Bitcoin and assume that I can get, 30% per year, maybe the year after that I'll get only 28%? Or do I go for a TradFi project that will consistently give me 10% per year? People have to start making those calculations. Yeah, no problem, Richard. This, congratulations on being retired. This is not stupid at all. I haven't even talked about prices, obviously. I was mostly thinking about investments and returns here. But of course, prices continue to go up as well. Like, that's back to what Jimmy said here about the 13% compound growth. Of course, it's all related: prices, money supply, demand. I'm a big believer in looking at what they do, not what they say. So that's why I like calculating the money supplies. So if the money supply grows at 12.5% per year, 12.7% per year, I would say at least make sure your portfolio grows at 12.7% per year. Prices grow at something that is less than that, because there is some demand for this money always. And we say demand for the money, it doesn't mean like demand for $1 million. It means I need a cash balance today to pay for a liability. So versus say, I don't need a cash balance, I can hold gold, or I can hold Amazon stock or Facebook stock. So there is always a demand for cash, which will mute the increase in the supply for cash. It's complex. I don't have a clear answer myself to this, but let's put this on log scale on the left. All right. Let's take this off. This is how basic money has grown throughout the years since 1970. You can clearly see it's a straight line on log scale. Bitcoin, it works differently. So how do people rectify that when they got to deal with rising prices? And they got to deal with competing investments. Now, if everyone did get onto a Bitcoin standard, then we would have this presumably, hopefully, gradual deflation, which you're mentioning. Sorry, mentioning here. Deflation in prices in general. That's part of the theory. But that will also be offset, especially if they demand that we use their currency to pay for things like taxes. That will be offset by this. And can you look at this money supply and tell me that this is like, we're going to switch anytime soon? Let's put it back on linear so you can see how strong it is. Every time there's a new ETF that comes in and buys Bitcoin, that's also going to be an increase in the demand for balances of brokerage accounts, which will in some way, shape, or form hold some money market funds, will increase the demand for treasuries. Remember, you can still borrow money as a government without printing money. So it's very complex. It's all complex. I'm not saying I have all the answers here, but do you mean as The Big Short becoming a comedy? Yeah. You know, in some ways, they learned a lesson globally in that they didn't want too much broad money chasing investments. So that's why they printed a lot of base money. Again, I'm not saying they know what they're doing or they're solving the problem, but the problem could be muted. Like the economic cycles could be muted that way. They could be they're still severe in real terms, right? If we calculate our purchasing power loss and everything else, but as far as being able to pay your bills, maybe they can manage. I remain not a doom and gloomer, but also not hopeful that a crisis will have our Bitcoin gains explode. I think it's going to happen naturally. Also, let's do doubling time again. So it's 7 years, no, 10 years. We can do this roughly. All right, 100 trillion, 50 trillion to 100 trillion took 10 years. All right, so that's roughly a 7% compounding growth rate for broad money, which you can argue is going to go into. It's actually not economically compared to Bitcoin, but if you want to talk about everything, it's some corporate paper, some treasury, corporate treasury, something somehow getting into Bitcoin, then whatever, use broad money. The growth rate would be, if you double in 10 years, that's a 7% per year compounded growth. Bitcoin will exceed that rate of growth well outside of this chart. All right. In fact, I can tell you when it goes to 7. I need this chart. Do I have this chart printed or ready? I think I do. All right, this will help. This will help, I think. Give me a second. I normally try to not do these on the fly, but this one I will. Ask questions as well if you need. I think this cycle is becoming a test of people's patience rather than wild price fluctuations. It's hard not to think. The wind has left the sails this cycle and catch people by surprise that way. 100% agree. 100%. I think this is a, I kind of mentioned that yesterday. I think if you think about how we're just riding the trend right now, and people will become complacent, and a lot of people have predicted that we will stay on this trend. Markets don't do that. So I think you could go maybe even into 2026 and then all of a sudden spike up. And then as Checkmate has talked about, it's not paper Bitcoin manipulation of the markets. It's just old hodlers are spending coins, and they have been for about a year. Any chance that Bitcoin's price has gone up to 100K, that's been a benchmark where a lot of people for a long time say, well, look, I'm going to spend coins. So it shouldn't surprise, I think, people. This is, again, where it's inherently difficult to hodl. And so if you can't do it and you feel like you need to pay off a car loan or whatever, or you just want to go on vacation like that, that's a strong need for a lot of people. I also have a hard time believing that these mountains change, right? These 3 mountains, 2021, 2018, 2013. These are days above the 90th percentile, right? Talked about this. So it's max 3 months, 4 months each cycle. And we're not even close to entering the... Let me go back so you can see this. It took us into May. Actually, we started in February 2021 to ride up into the 90th percentile. We haven't even started now, and that was 4 years ago. Or retire. Everybody's got some need for some coins. Different use cases. Right. Okay, I'm going to open this up, and I hope it works. Oh, there's the TTM. One second. All right. I haven't shown this in such a crazy scale ever. I just picked a date and like spit it out. So why isn't that going? Okay. All right, so here's the price action. Here's the trend, and we're going way out into the future. So if you bought Bitcoin today at 108,000 or whatever it is, 106,000 now, this is still from June 29th. This is how your compound growth will evolve from today. So if you held all the way until 2070, the trend suggests, and again, this gets philosophical. I know this is not, we're probably going to be on a Bitcoin standard by then. We'd definitely be on a Bitcoin standard by then. But the dollar exchange rate is 215 million. And the expected return, not expected, this would be if you bought in 2025 and held until 2070. Your compound growth is 18.4%. That's what it would be. But as you can see, the longer you hold, because the curve doesn't grow constantly in a power relationship, you will get a lower number. And I didn't pull it out to where it finally hits it, but it will hit 10% in the year, let's say it goes under 10%, in the year 2159. So this will go under 10% in the year 2159. So over 100 years. So practically speaking, no one in this world today should be worried about the purchasing power of Bitcoin if they buy it and hold it, even if the price falls. But it is a phenomenon that is happening. If you understand the power curve and you believe, to use that word, if you believe in the power curve, it's not growing in an exponential fashion. It's growing in this concave way. Okay, but then you got to ask the question about the trailing 12-month returns, because that's different than buying and holding. So trailing 12 months is like what someone will see in the future if they get involved in Bitcoin. So with that, it's going to be different. And let me know if you have any questions on this, but let me take this way out. Give me a second. I'm doing this on the fly. This is not what I want. Where am I pulling this from? Sorry, so much dead time. I know. Not the best streamer. I can hold this for tomorrow, but give me a second. I do need a search bar in my setup. Here it is. Here it is. All right, so 15.9% all the way to 2085. You got to go to like past 2050 to get to a 10% return. But this one, all right, 60,000. This is huge. So we're in the we're in the 6,000th day of Bitcoin. Remember, this is relationship over time. All right. So I do have it. Let's go log scale. All right. Now, this should be interesting, I think. I hope. Here's the simple trailing 12-month returns. This is more apropos to sort of how we might expect a financing or a bank loan or something to look over time based on what Bitcoin is giving us versus the dominant currency, right? And this is obviously adoption, supply, demand. So the trailing 12-month returns have been this, right? They've been all over the place, very high, thousands of percent in the early years. Then they've calmed down. During the last cycle, the max 12-month return was 400 and, where is it? How high did it get? Did I just see? No, it's the black B, right? 1,000% was the last trailing 12-month return. I presume it's going to be less than that this cycle, right? And a trailing 12-month return, 1,000% was 60 grand in February 2021 or wherever here, March 2021. That means in March 2020, the price was 6,000. I think we'll get less than 1,000% or 10x this time because that's a million. And I think it'll be less. No, it is out of the fiat system, but the fiat system will try to shoehorn its old ways, which are exponential. But Bitcoin grows differently. So that's what I'm saying is how the market will value it and how contracts will be signed and things like that. Because if Bitcoin continues to grow the way that it does and it starts to get mass adoption, at some point, investors will say, well, you got to give me a return that's better than Bitcoin. But Bitcoin actually does fall, and presumably things will get more productive. And prices, once you own Bitcoin, prices won't rise as much. Again, it's very complicated, but it will look different than the exponential system of the past. Yeah, and the question that I'm trying to answer here, or what I've been talking about with these rates of return, and what I've been thinking about is how investors or how the market looks at the cost of capital for just investing in Bitcoin versus doing other projects. So anyway, using the math, we can still calculate this out. Okay, so let's take away the noise now. This is the noise. And let's even take away the noise of price. It's just the model. All right, and obviously we're very close to the real price here on the model. We have 105,000 models of 105,000 roughly, whatever. I'm going to zoom out and you're going to see a crazy long scale to 2167. So remember I said 2043 is where I suspect will match the size of the monetary base at 150 trillion. But let's see where this TTM, all right, on the regression, that means just the trailing 12-month return that you'd get for buying Bitcoin, the expected return. Let's see when it gets to 10%, okay? So we got to go all the way out here, here. As I said, it's somewhere around 2070 when it will fall to, say, 9 or 2070. 10%, roughly speaking, is what stock market investors today are getting or would demand, because you can get that in the stock markets, especially if you reinvest the dividends. It should be even easier to get 10% if you're just invested in the S&P 500. So if Bitcoin, the expected, again, I know this is like an insane price, insane example. We're going to be on a different standard, a different world at this time. But still, if Bitcoin is gradually, you're getting less every trailing 12 months, one might wonder if people would either A, try to bag the system at that point and say, hey, we can go back to just printing money and make more return and make better investments and whatever. Or B, the nature of contracts, debt contracts, equity contracts will be different under a Bitcoin standard. Jeff Booth has written about that with the price of tomorrow. 2167, yes. So you'd expect 52, what is that, thousand million billion? $52 billion Bitcoin price, 2167, growing at 3.7% per year. Obviously, I know this is like all just a joke to look at these numbers, and the system will change beforehand. But what I'm saying is, I think for the system to really, Bitcoin's still doing too well, and it's viewed as too risky still for a lot of people because it's giving these crazy returns. All right, like I said, we're at 42% right now. By the end of the year, we'll be about right at 42%. So we can go all the way out to where I was suggesting we'll match fiat, be at about 18% return per year on Bitcoin. Something's going to give away before this. I think we'll be on a SAT standard before then. But it doesn't mean that you're just on Bitcoin and then you forget how contracts work. Like, people still need to invest. They need to think about a rate of return in the future. But how do you do that when now we're in this sort of either a deflationary economy or side by side along a fiat currency economy, because governments are still going to try to hold on to the power that they have. I guess a lot can happen in 10 years, but this is why I'm different from the maxis and the hyper Bitcoinizers. I don't see the world governments going away in 10 years, or nation state governments. Let me tell you something about retires. I'd lose his mind. There's very little do for an old captive besides sit and whistle and wait for the postman to bring him his pension. You guys still have checks in Norway, Geo? There's a lot of numbers, a lot of math. What I'm trying to do is square the power growth of Bitcoin with the exponential growth of the world money supply. And I don't think anybody has a holistic view. This is probably some of the best data you'll see on it. But they're going to keep printing. They're going to keep throwing dissidents in jail in autocratic countries. Hopefully not in the United States. They will throw you out of the country for having a J.D. Vance meme on your phone. There's going to be a lot of cross currents, a lot of I think the thesis for a lot of the maxi hyper Bitcoiners is that whatever. Maybe there's pain, maybe there's a crisis, but would people just move into Bitcoin? I don't think that's how it's going to work. Central banks may go to gold before they go to Bitcoin. As I said yesterday, they have more gold than they have Bitcoin in the vaults at the moment. Roughly $4 trillion worth of central bank gold worldwide versus $50 billion worth of Bitcoin. So my point of showing this really super long chart of how the trailing 12-month returns look on this curve is that we're still early. We're still in a very risky period. Bitcoin is definitely on this curve. I'm almost convinced of it. I mean, if I'm happy to be proven wrong, I'm happy for it to go exponential on a unicorn trajectory tomorrow. But it's a very interesting adoption curve, and I think, maybe two halvings out from now, like it's just going to be so unavoidable how good Bitcoin is that people start contracting in Bitcoin. Demand to be paid in Bitcoin, all the rest. And then when that happens, does that mean we are in a deflationary environment, or are we moving alongside a fiat environment, which is also, by the way, we talked about, they'll start to back Bitcoin. This is another thing that I think is hilarious with the Bitcoiners that are hyper Bitcoiners. They're usually also fans of the government holding Bitcoin. And like I said yesterday, if the government holds Bitcoin, Bitcoin backs the fiat. Bitcoin's a good thing. Fiat's a bad thing. Does that make fiat less of a bad thing? I think yes. I think it's less than a bad thing. And it hangs around. $21.67. Do not age, guys. That's a great, I've mentioned them before. It's a great supplement company, British, nonprofit even. DoNotAge.org. Get your supplements there. Free marketing for you guys at Do Not Age. 21.67. Let's hold out for that. So that was a less than polished comparing and contrasting of Bitcoin versus the world money supply, but that's the interesting question to me, is a system of power network growth versus a system of exponential currency growth. Neither is going to give in easily. This shouldn't be in euros, by the way. This should be in dollars for the world supply, but like I said, I was making it quick this morning. Anybody take NMN? Gives me energy. Gives me energy levels, but that's about it. I don't know what the best will it be a big bang, or will it be war? Will it be something like this, kind of a whimper? If I had to guess, you move away from fiat only, you go back to some gold, you go back to some Bitcoin, and the system continues on. It gives you energy. It gives you lots of energy. Uh, I'm not a statistician. My understanding is it's never really happened. Like power turning into exponential. It's my understanding. Could be a first for everything, though. I'm more inclined to think that the system merges to Bitcoin, but people are still going to remember how loans were calculated with exponential growth, compound interest, and they want one number and they want to be simple. And I don't know. Red light therapy. Anybody doing that? Omega 3 is very good. I started taking creatine only this year. I used to, like, because it was around when I was in high school, you know, like 25 years ago. And I remember people, like my friends, taking it for football and track meets and stuff. And I never took it because I thought it was like something dangerous or whatever. Now it turns out it's a pretty safe supplement. Like you can take a lot and not overdose at all. So I'm way late to the creatine game, but I started this year. We cover everything on this channel. I hear that is the best. If you got the time, if you can get out, not have to worry about the kids or other stuff. You guys don't have any, or no, I forget where you are, Daniel, but Anders in Denmark. I don't imagine you have too much sun there. Yeah, I've heard that as well. Good for the eyes. It's early for you. Or late? West Coast? I mean, here. Daniel. Wow. Well, good morning. Have you had your coffee yet? Have you had your walk outside? It's very early. You know, Satoshi's time zone was thought to be East Coast America. Yeah. Well, we can't even get it here at all. I mean, it's been amazing days here. Actually, not hot at all. Wherever the jet stream, I understand it's like blazing in Central Europe and, or, you know, like Italy and even Germany, right? But up here in the Baltics, it's been pretty nice. It's finally going to be hot here today. I need to do a run myself. So let me know if you have thoughts more, but I need to rectify this more, or I need to think about this because this is like two stars colliding. Two very different worlds, right? And if you have contracts done in Bitcoin and people are thinking in terms of Bitcoin, but Bitcoin doesn't obviously grow the way that the fiat world grows, then either A, you don't have interest and you just wait on the purchasing power that you gain to kind of be your interest, or you do have interest, but it's sort of a lower level of interest and will decline as well. And that sort of seems weird as well. That's one of the theories. You guys don't buy into the Benelux thesis? Because there are a couple of those guys, and the one that died, Lassaman, who was he had access to books that were possibly in the Benelux system. I don't. Was it Ghent? I'm blanking. It's a long time since I read it, but there's. If you look at some of the citations in Satoshi's paper, it's possible that a couple of them were only available by hard copy and only available in the Netherlands or Belgium. A couple universities there, some crypto books, and people thought it's possible that it's him. Ended up dying. Not Lassaman, Sassaman. Len Sassaman. Leuven in Belgium. And that's where some of these books were. I guess that some of Satoshi's citations like were in hard code form. Does it not even have? It's maybe some cypherpunks. Now the cypherpunks don't like talking about it. But anyway. Yeah, maybe. It was Leuven. Leuven was the town. It's incredible. It's an incredible mystery. I didn't even know this was embedded into the blockchain, but it was. And there are so many Easter eggs. There's so many like misdirections. The time zone is weird, right? Because most people thought with the time zone that the posts reflected East Coast US, but again, probably Satoshi wouldn't have a normal sleeping schedule anyway. I also have mixed feelings on that as well. Or it could have been one point person, but he knew all the other people. It's an incredible, incredible achievement. If anybody's re-listening to this stream, you got to go on like 3x speed. A lot of dead time. Sorry. I don't remember. Remind me what's which random number generator story? Oh, that the NSA altered the random number generator. Honestly, it's all above my pay grade. Oh yeah, right. That came from right, which in itself is a wild thing. I don't know if that's actually true though. It would be good if someone could confirm that as well. That's very compelling evidence for someone either having worked for the government or been pretty close to the government. Right. None of the hardcore Bitcoiners want to even talk about it. They don't want you speculating. But obviously, people are going to do it. I wonder if we will ever know, though. You know, if it's a lot of interesting coincidences, but he died in 2015. Be quite old to have done it. Right? Could have been involved. Could have been involved. You know, as an advisor role. You know, I have actually. Maybe back in 2018 or 2019. Haven't followed him in a long time. Good dude. His brother as well, Nasir. Good people. They, you know, studied in the U.S. and I think big on the shitcoin trading, but they obviously know that you got to get the game is just to get more Bitcoin. I haven't read anybody who expounds upon this theory though, Daniel. Have you like I've heard about it a lot. There's been a couple of these, but every rabbit hole that usually the authors go down or the Wired guys or some of these articles seems to usually be the real misfits and the cypherpunks and the far away from government people. Do you have a book or reading material where people are kind of digging in around the NSA? Because I'd be curious to read that myself, more about that. Yep. MVRV, which is a very nice, simple multiple. I still think my PSR is better though. Price to sales. Here's the old price to sales. So market cap divided by total miner revenue over trailing 12 months in dollar terms. Remember, it's a very small number. It's like 15 billion. So the PSR has always been rising for Bitcoin, which is interesting. But it definitely, when it goes to the extremes, you can see tops and bottoms. And we're still not at the extreme. Meme coins are not shit coins. Who are you referring to? Sonic? This is good reading, though. I mean, this is what do I want to put up here. I need to read more about this myself. Because obviously the random number generator thing, the different algos that were chosen, were not chosen. All coins, you mean every coin? I think what I can show tomorrow is, which again, to merge the exponential world with the power world, is we show what was the trailing 12-month returns for gold and fiat money here, and then now the exponential pitches out, which is going to be like 7%. It will be as well a straight line, right? And the Bitcoin returns will be the opposite of this, so that we're going down. and they will approach each other. And the question is, how do contracts look as those numbers approach? That's my question. I've been thinking a lot about lately. Sveiks, Kasper. Labdien. Trump certainly doesn't promise anything. Or he might promise, but he usually doesn't deliver, right? All right, guys. I think I'm going to have to leave it there. Fascinating stuff. Take your vitamins. DoNotAge.org. Exponential versus power. We'll explore this because I think you got to work through these different returns, approaching when you get a TradFi return, how's that going to look? And then the world money supply is 100 trillion at least. It's top 4 currencies. I don't see this turning around for anything. And so the reason why it catches up with exponential is because it's just grows faster. Okay. Most of the financial world at the moment, and just to use very round numbers, like 5 to 10% per year growth, that's it. Even with crazy inflation, of course, I'm measuring things in dollars. If you measured them in Argentine pesos, it would be way faster. But if you measured it in dollars, in the numeraire, it's 5 to 10%. Bitcoin's growing at like 40% at the moment. So when you get to this is a better one. So Bitcoin used to be at, on a model, 1,500% per year, right? Trailing 12 months. Very quickly went down to, very quickly went down to something like somewhat normal, at least a couple 100% a year. Now it's down to 42. And so even though it has this curve and it's not a straight line, it's just growing faster, but it will level out. You'll get to 10% by 2070. Where is it? So I've been theorizing a little bit of how the TradFi world, which is exponential, will merge with the Bitcoin world, which is power. Because Bitcoin's still going to be better money, but to do a contract in like a loan contract that's different than traditional compound interest, which is exponential, how will that look? And also if prices are gently falling, as Richard mentioned. Thanks, guys. Thanks, Gio. Yes, I like to call it the power curve. People get triggered with power law. All right. I need to go for a run. Do some other stuff. But thank you guys for tuning in as always. And I enjoy this. Hope you do as well. I will see you tomorrow.